Welcome to weekly view on markets. Nifty gained further 1.5% during this week. Momentum was in favor of large caps. Mid cap and small cap sectors consolidated during this week. Charts look technically strong, but market valuations are higher than the long term average. Continued DII buying is keeping the markets steady. Domestic ownership of markets have gone up considerably over the last few years, and hence FII selling has no big impact on the markets. FIIs have been selling continuously, but that has little impact on the market levels. RBI meeting and Q2 results, that is quarterly second quarter results, will be the next triggers for the markets in the month of October. Good Q2 results and earnings will have a good impact. They will bring down market valuation. Investors are advised to remain invested as markets can scale higher levels. Now let us look at the performance of indices during this week. Nifty closed at 26,178 with a gain of 388 points, that is 1.5% higher. Bank Nifty gained 41 points, that means it is just consolidated during the week, closed at 53,834. Nifty Mid Cap Index gained 172 points and closed at 60,381. Small Cap Index lost 90 points. It closed at 19,242. India VIX is at 11.96. So overall, we can say this week was consolidation for the broader markets, but the momentum was in favor of large caps. Now let us look at sectoral performances. Almost all the sector gained during this week, except private banks and FMCG had minor losses. Metals gained the most, that is 7%. Public sector index gained 5%. Oil and gas also gained about 5%. Auto stocks gained about 4.6%. Commodity stocks gained about 4.49%. Energy sector, manufacturing, PSU banks all gained between 3 to 4%. Media, infrastructure, pharma all gained between 2 to 3%. Realty sector and consumption gained around 1.4%. So the market bet was in favor of advancing stocks. Many sectors have seen buying. The overall momentum is quite good, and buying was majorly focused on the large caps. Now let us look at technical charts. This is the daily chart of Nifty index. Last week I had told that it has formed a bullish flag pattern, and this bullish pattern will give further upside, and we have seen market has gone to higher levels, and this momentum is likely to continue in the coming week as well. This is the chart of Nifty Mid Cap Index. Here too we can see the impact of the triangular pattern. This triangular pattern has given a breakout, and Mid Cap Index has gone up on Monday, and then it has sustained around these levels. So Mid Cap Index may consolidate or it may go higher in the coming week. This is the chart of Nifty Small Cap Index. We had discussed last week that it is likely to go to the higher band, higher level of this band, and it has touched the higher level of this band, and after that 3 days of small corrections in small cap index. It has got good support at around 19,000 levels. So investors can look at buying good quality small cap stocks if Nifty mid cap index comes to around 19,000 level. This is a chart of Bank Nifty index. This formation, which was called as rounding bottom, has given a breakout, and this rounding bottom formation takes long time to be seen on the chart. And when this happens, this is a strong bullish pattern which indicates further upside in the Bank Nifty in the coming week. Now let us look at some of the market fundamentals. Indian economic fundamentals continues to remain good, and it is becoming stronger by month on month. RBI forex reserves had touched a record high of 700 billion US dollars. It is up by 15 billion US dollars. This is a quite comfortable reserve position for RBI, which can take off any shocks in the economy. Forex rate is at 83.70 per dollar, and dollar index is studied at around 100.42. Brent crude price has substantially come down in the recent weeks, and it is at $72.45 per barrel. We have seen a good rally during this week in the oil marketing companies. As the crude prices has cooled down, they will have a lot of inventory gains, and which are likely to reflect in good performance of these companies. So we have seen a re-rating of oil marketing companies because of this. Gold price had touched all-time high of 75,000 for 10 grams 24 carat, and presently it is at 74,930 for 10 grams. The festive season has provided good demand for gold, and gold price is going up. FIIs have sold 3,933 crore during this week, but domestic institutional investors have bought 15,962 crore in equity during this week. This is a large quantity to be bought by DIIs during this week. The continued money flowing into the domestic institutions through mutual funds and investments by retail investors is providing a good support to the market. So, because of this domestic institutional liquidity in the market, I don't see any big correction. The FII selling is matched by DIIs. They are buying much more than the FII is selling. So that is keeping the market levels without any major correction. Monetary Policy Committee meeting will be held in the first week of October. Already there is a rate cut of 50 basis points in US. So we can expect a rate cut of at least 25 basis points in the MPC meeting. So in view of this, banks and rate sensitive sectors like NBFCs and housing loans, insurance companies, stocks will be going up in the coming week. Market is at all time high. So I have looked at the market valuations. Nifty is trading at a forward PE of 20.9. That is 1 year forward PE of 20.9. Current PE is around 23. So 20 forward PE is slightly premium above the long term average. But still, as we are looking for a good earnings growth, there is room for Nifty to go up further. Nifty mid cap index is relatively highly valued. It is trading at a forward PE of 33, which is quite high. So investments into mid cap sector or mid cap mutual funds at this point of time is to be avoided. The mutual fund investors, those who want to choose mid cap funds, should invest through SIP only. Nifty small cap is trading at a PE of 23. So there is quite a bit of variation between mid cap and small cap. Why? Because the small cap companies have shown a very good earning growth in the last quarter. I had discussed this a few weeks ago. So then there is quite a room in the small cap sector for the companies to go up because their earnings have picked up, and that is going to provide good valuation support for the small cap sector. So investors can look at starting new SIPs or investing some amount of lump sum into the small cap sector at this point of time based on the valuation parameter. Q2 results, that is quarterly results, second quarter results will start from 10th October. It will start with IT companies followed by large banks. So we can see that if some of these results will be quite good. So the Q2 results will be keenly watched. Good earnings in Q2 can bring down the market valuation, or it can keep the market valuation within a reasonable limit. Because of all these factors, any correction in the market is a buying opportunity. Investors should have patience. They should not book profit at this level. There is much more money to be made from the markets. Please be remain invested, and mutual fund investors should continue their SIPs. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions, which I will reply. We will meet again next week. Thank you.